Hello everyone. Thank you for joining today's True Trading webinar. I'm excited to be here with you. My name is Mohammed Azim from Traders United. Risk disclaimer. True webinar house rules. Please take the time to read important rules for webinar attendees. Let me start by sharing a little information about myself. I am a certified elite wave analyst, having earned my level 1 certification back in the year 2012 with a score of 93%. This certification deepened my understanding of market behavior, especially through the lens of elite wave theory. In addition to my work as an analyst, I am also an author and educator. I wrote Introduction to Elite Wave Theory, a book designed to help traders like you build a strong foundation in understanding the intricate structure of market waves. But my expertise does not stop at Elliott wave. Over the years, I have expanded my knowledge into broader market analysis, diving deep into market trends, chart patterns, and price action strategies. So, whether you are a beginner or an experienced trader, I aim to provide you with valuable insights that will help you navigate and succeed in Forex markets. With that, let's dive into today's session. So, these are the main topics that we are going to cover inside today's webinar. Let me talk about macroeconomic events and data releases. I am going to cover previous week fundamental analysis. The first one is the construction PMI UK. Okay, 1 second. Okay, and the second one is the non-farm employment change USA, and it is related to euro dollar currency pair. Okay, let's talk about construction PMI UK. So let's talk a little bit about it. What is construction PMI? The S&P Global UK Construction PMI, also known as Purchasing Managers Index, is a monthly measure of activity in the United Kingdom construction sector. It is based on survey responses from purchasing managers across the residential, commercial, and civil engineering industries, tracking indicators such as business activity. And then we have new orders and client demand. The next one is the employment trends, input costs, and supply delivery times. Generally speaking, PMI reading above 50 signals expansion in the economy, while a reading below 50 indicates contraction. As a forward-looking indicator, the construction PMI offers early insights into economic momentum and potential shifts in monetary policy expectations. Now, on June 5th, 2025, the construction PMI numbers are as follows. The forecast was 47.4, the previous number was 46.6, the actual number that we got is 47.9. Now, the 47.9 is still below the 50 level. The UK construction sector has faced ongoing headwinds in recent months, with the prior reading of 46.6 reflecting contraction. The latest report shows a better than expected reading of 47.9, still below the 50 number, which is the threshold, but suggesting stabilization may be underway. So the market impact that we got on pound dollar is that the GBPUSD often reacts to significant surprises in PMI data, particularly when there are no competing macroeconomic drivers. While construction is a smaller part of the UK economy compared to services or manufacturing, this report can influence short term sentiment, especially when it aligns with broader economic trends. Now, if the PMI beats the expectations, like say the expectation was 47.4, and we get higher than that, then obviously it supports the GBP USD, and particularly if it adds to the narrative that the UK economy is stabilizing. So obviously we got the number at 47.9. So this means a move closer to the 50 mark may also reduce recession concerns and soften dovish expectations from the Bank of England. Okay, so what we got is basically the GBP USD moved higher after the data release. So despite remaining below 50 expansion threshold, the construction PMI's rebound to 47.9 is a positive surprise. It beat the expectation. So it suggests that the pace of contraction is slowing and some stabilization may be occurring in the economy. Traders will look beyond the headline figure to assess trends in demand, employment, and input costs to determine whether a recovery is beginning or if risks remain elevated. So the conclusion is, while not a top tier market move on its own, the June 5 construction PMI release carries more weight in a data sensitive environment. Let me show you the chart of GBPUSD currency pair. If you go over here, GBP USD. Here, this is the day weekly, and then we got the daily. So in daily time frame, overall we got further upside. Okay, so after the PMI data release, uh, I see this as a bullish scenario, and that is the reason why we got a bullish price action inside GBP USD currency pair, and the PMI report, uh, actually we got better than expected result, and it has lifted the GBP USD in the short term. The next one is the non-farm employment change, also known as NFP, non-farm payroll data report, and we got this on June 6th, 2025 on Friday. So the NFP report recap is that following the NFP release, the Euro USD basically moved higher. Now the report came in stronger than forecast. It still indicated a slowdown compared to the previous month. The previous number was 147, and the actual number we got is 139. The forecast was 126, and due to this reason, we got a weakness in United States dollar index, and overall Euro USD currency pair actually moved up. Now, the non-farm employment change, the NFP report, measures the monthly change in the number of employed individuals in the USA, excluding farm workers, government employees, and non-profit staff. It is among the most influential economic indicators, offering timely insights into the health of the financial health, I would say, of the US labor market. So, published by the Bureau of Labor Statistics, the NFP, the key driver of USA and the dollar volatility as well. So, the stronger job growth typically supports a stronger dollar. Well, we haven't got that. Okay. The previous number was 147, we got 139. So while that's a disappointing number, and that can trigger dovish monetary policy expectations and weight on the greenback. So the previous number was 147, the forecast was 126, the actual number is 139. Now the actual number did beat the forecast level, but it's still below than the previous month number. So while the US economy added more jobs than expected, the data still shows a gradual cooling, okay, in if from the previous month number. So the number reflect a moderate but resilient labor market, supporting the narrative that Fed can remain patient on rate cuts, but not necessarily more hawkish. So the market impact that we got is on, if you check out the euro dollar currency pair, let me show you the chart of euro USD right over here. Euro USD actually moved higher, and the way I see it is going to rise up further. So after this data report, we got a bullish price action. So Euro USD is often highly reactive to surprises in the non-farm payroll data report, with market expectations already leaning towards a soft number. The moderately better than expected print had a mixed effect. It initially supported the dollar but wasn't strong enough to reverse the broader bearish trend. So as a result, Euro USD moved higher. Okay, so it moves up, but I would also tell you that it's also hitting these these old swing highs levels over here. If I zoom out, go over to a weekly chart, you can see this is the weekly time frame resistance level up there. So euro USD is going up, but it is also going to hit some sellers area, some sell zones, I would say. But after the report, we got a nice bullish price action. The price was already going up, by the way. So the euro USD extended its rally after the NFP release and driven by expectations of a softening Fed. However, the pair is now nearing major resistance zones, and the momentum indicators such as RSI is now nearing, it's flashing potential overbought readings. Like over here, we got the weekly time frame. The RSI went above the 70 level, and if you check out the daily time frame, it was overbought over here. And now, as soon as you see more further upside, the RSI is again going to hit the 70 level. So it suggests that the upside potential is limited. Okay, so market might tries to retest 1.1575 level. I will talk more about the euro dollar later. So after the news announcement, what we got is, despite coming in above forecast, the NFP report confirmed the trend of slowing job growth, which the market interpreted as supportive for euro dollar currency pair. However, the pair is nearing overbought territory, and further upside may be limited without more dovish data. The dollar remains oversold on some metrics, and any hawkish surprise from future data or Fed speakers could trigger a reversal. So on June 6th, NFP release added to euro dollar's bullish momentum, but the overall labor market should be cautious of a potential top forming in the coming sessions. As always, follow through depends on the broader data landscape and evolving central bank expectations. A shift in sentiment could quickly reverse gains, offering potential setups for United States dollar bulls on signs of exhaustion. Okay, next one is, let's talk about the euro dollar and US dollar Swiss franc. Now, if you take a look at US dollar Swiss franc, the way I see market was, trying to go sideways overall. So I think the United States dollar versus Swiss franc currency pair, it's most likely going to drop further. So we have some support down over here. So in coming trading days, we are most likely going to uh, get a retest around 0.8109 level, and then it might bounce back up from these levels. But for the time being, expect for the weakness in price action. Next one is the euro dollar. The way I see euro dollar is most likely going to rise up more. I know it's hitting these resistance zones up there, so it might try to retest it. So the way I see euro dollar is probably going to rise up. Okay, probably going to rise up and then it's going to drop. So the way I see, uh, I expect further upside inside euro dollar currency pair. Okay, next let's talk about the current week macroeconomic events and data releases. So the current week fundamental analysis. Uh, on June 11th at 12:30 p.m., we're going to get the core CPI. M over M means month over month in USA. And the currency pair we are interested to watch out is the euro dollar currency pair. The next one is the June 12th financial data report, which is the gross domestic product GDP month over month in United Kingdom, and we're going to focus on GBPUSD currency pair. So let's take a look at some more details. The core CPI, which we're going to get on Wednesday, June 11th, 2025, tomorrow. So the core consumer price index, the core CPI, month over month, measures the monthly change in the average price of a fixed basket of consumer goods and services, excluding food and energy due to their inherent volatility. This makes it a more stable gauge of inflation trends and a crucial tool for understanding underlying price pressures in the US economy. The core CPI is one of the most closely watched indicators by the Federal Reserve. A higher reading typically increases the likelihood of interest rate hikes supporting the US dollar. Conversely, a weaker print may raise the odds of rate cuts, potentially weakening the US dollar and lifting Euro USD. Now, the core CPI number that we got previously was 0.2% based on previous month's data, and the forecast is to get 0.3%. The actual data didn't release yet. It's going to be released tomorrow on June 11th. Now, market expects a slight uptick in inflation from the previous month's 0.2% to 0.3%. This would signal a modest rebound in price pressures, but still suggests inflation is relatively contained. However, the market reaction will depend on whether the actual figure comes in above, below, or in line with forecasts. The possible scenarios and impact that we expect for the euro dollar is that if the core CPI is higher than the forecast level is 0.3%. So if we get a number which is greater than the 0.3%, this indicates sticky inflation and stronger pricing pressure and reinforces expectations that the Federal Reserve will keep interest rates in USA for longer. Strength, and it also strengthens the United States dollar and puts some downside pressure on euro dollar currency pair. So market may start pricing in delayed or fewer rate cuts in 2025. Now, if the core CPI matches the forecast of 0.3%, then this signals inflation is tracking as expected, and the US dollar may react in a muted fashion depending on accompanying data such as services inflation or shelter costs. If market were expecting a softer number, the Euro USD may still rise modestly as dovish sentiment grows. So, and we might get some kind of a sideways looking price action. Now, if the CPI number that we get, the core CPI number, if we get lower than the forecasted level, which is the 0.3%, if we get, let's say, lower than that, the actual number, then it suggests inflation is cooling faster than anticipated, and it increases chances of the Federal Reserve pivoting to rate cuts later this year. And it also weakens the euro dollar, and we would probably expect more upside in euro dollar currency pair. And this could obviously trigger a broader shift towards risk on sentiment, benefiting the euro and equities. So the overall analysis is that the June 11th core CPI print is likely to shape near-term expectations for USA monetary policy. Traders are increasingly focused on signs of disinflation or inflation persistence as the Fed balances its dual mandate. So if we get a higher than expected core CPI, it is going to strengthen the United States dollar and expect a drop in price action of euro dollar currency pair. And if we get lower than expected core CPI, then it's obviously going to provide us a weakness in United States dollar index, the DX, and the euro USD is going to rise up more. So beyond the headline figure, components such as shelter costs and core services will be closely dissected for signs of inflationary momentum. Okay, so the conclusion is the June 11th to 2025 core CPI report could be a critical market mover for euro dollar currency pair. With the forecast pointing to a 0.3% rise, traders will be sensitive to any deviation. A harder reading could reaffirm the Fed's higher for longer stance, boosting the dollar and pushing the euro USD lower. Conversely, a softer print could fuel expectations of upcoming rate cuts, propelling euro dollar higher. As always, watch out for follow-up commentary from Federal Reserve officials and how the market interprets the broader inflation trajectory. The next one is the gross domestic product, the GDP, month over month in UK. So what is GDP? The gross domestic product month over month measures the monthly change in the total value of goods and services produced within the United Kingdom. The it is one of the most important indicators of economic performance, reflecting the pace of economic growth and business activity in United Kingdom. So a stronger GDP reading generally leads to higher interest rate expectations, which can support the British pound. On the other hand, a weak GDP figure may signal economic weakness, potentially triggering dovish action from the Bank of England and weakening the GBP. Now, the previous number we got is 0.2%. The forecast is actually negative. It's minus 0.1%. The actual data didn't release yet. So markets are expecting a modest contraction of 0.1%, but in minus. So minus 0.1%. That's the GDP number people are expecting for this month on June 12th, 2025. And this is a notable shift from the previous month positive number of 0.2% growth. So if the actual figure is better than expected and shows any positive growth, the GDP number that we got, if we get a positive growth, then the GBP could see immediate support. So the possible scenario is, and the impact on GBPUSD is that if the GDP is higher than forecast, meaning above than minus 0.1%, ideally positive, I would say, then it indicates the UK economy is more resilient than expected, and this could boost the British pound, especially if investors see this as reducing the chances of rate cuts from the Bank of England. So GBP USD would likely rise as demand for the GBP increases on improved economic sentiment. Now, if the GDP matches the minus 0.1% forecasted level, then it confirms mild economic contraction, and market reaction may be neutral or slightly bearish, especially if there are no signs of recovery in future outlooks. So GBP USD may trade sideways or drift lower depending on risk sentiment and US dollar strength. Now, if the GDP is lower than the forecast, like the expectation is minus 0.1%, if we get minus 0.2% or minus 0.3%, that suggests a deeper economic slowdown and stagnation, likely to raise concerns over the UK's financial growth trajectory and increases bets on Bank of England rate cuts. And if that's going to happen, then obviously the GBP USD currency pair would likely decline, and the GBP weakens under growing economic concerns. Okay, so overall analysis is that the uh, June 12th GDP report is particularly important as it may confirm whether the UK economy is entering a soft patch or managing to stay resilient. Okay, the market will use this data um, to recalibrate expectations for Bank of England policy in coming months. Okay, so the conclusion is the June 12th to 2025 GDP report will likely be a decisive event for GBP USD price movement, with a forecast of minus 0.1% following a 0.2% reading previously. The market is bracing for a potential slowdown. However, any upside surprise may fuel a rally in GBP, uh, while a disappointment could renew bearish pressure on the pair. So let's take a look at a pound dollar currency pair, GBP USD. This looks like to me a clear uptrend. I know the market is overbought with the RSI and weekly time frame, but overall it just keep printing higher swing highs and higher swing lows. So the way I see it looks quite bullish over here. Next, let's take a look at euro dollar and United States dollar versus Swiss franc pairs and see what's going on. So regarding the euro dollar, I already told you that I'm expecting further upside in euro USD currency pair. We have some resistance level right up here at 1.1577 area. So if price action is going to rise up further, we're going to get a limited upside, I would say. Okay. And regarding the US dollar Swiss franc currency pair, the USD CHF currency pair is most likely going to drop further. The overall trend is bearish, by the way. If you check out the weekly time frame, prices keep printing down and down and down. So this was a retest. So market is probably going to drop more before it actually prints a long-term bottom. Next one is the GBP versus United States dollar, GBP USD pair. Okay. So GBP USD currency pair bullish trend going on. If you check out the daily, I expect further upside. Let me zoom out a little bit. We have some resistance level right up here. So it's quite possible that price action is going to retest this level before we actually gets a top inside GBP USD currency pair. So the forecast is bullish in GBP USD currency pair. Next one is the spot gold. Okay. Let's take a look at spot gold. Spot gold, I was expecting a drop in price action and market actually started the decline. So last week we discussed that the spot gold is most likely going to create a short-term bearish pullback. Okay, but the overall trend is still up. If you go over to a weekly time frame of XAU USD pair, you can see that price action just keep printing higher swing highs and higher swing lows. So there's a nice uptrend going down inside spot gold. Okay, so overall, on a short-term basis, we might get kind of a pullback over here in price action, but after that, expect further upside in spot gold. Okay, so what you have learned today? Well, I discussed about the core CPI month over month, and we also discussed about the gross domestic product, the GDP month over month UK financial report. These are the upcoming reports. Then we also discussed about the euro dollar price action, US dollar Swiss franc, GBPUSD currency pair, and spot gold. So these are the assets to watch out for profits. What you should do next? Well, stay tuned for the schedule of next week's trading webinar. You can subscribe to our social media pages to stay updated with true exciting events, trading content, and market insights. And if you're interested to learn more about trading, visit TradeGeek and access free trading courses for beginner, intermediate, and expert traders. Thank you for hanging around. See you at the next trading webinar on Tuesday, June 17th, 2025. So that's it for the time being from my side. Have a nice day and bye bye.